Welcome back for the shocking story of what big banks and exchanges like the COMEX and London's LBMA are doing to crush silver, gold prices, and you. Now make sure to keep watching to the end for the details on the biggest financial heist in history and how it's unfolding right now. Now smash that like button if you're ready to expose their plan and why I believe we are in the silver opportunity of a generation. Silver's exploding up over 100% year to date to a nominal high of $61.52 in after hours on December 10th. After repeated attacks by Mr. Slammy McSlammerson as we watched live, gold's not far behind, surging amid the same manipulations. Now why am I holding all this fiat paper currency that's literally worthless? Because it's the currency of banks that they want you to buy into, and banks like JPMorgan, who are rumored to have abruptly moved their New York trading desk for gold and silver to Singapore last week. Some are saying it's to evade US scrutiny as the squeeze intensifies. More on that bombshell later. Bank of America, Barclays, Scotiabank, Deutsche Bank, HSBC, UBS, and many more have literally paid billions of dollars in fines for spoofing, price fixing, derivatives fraud, short selling schemes, and other dirty tricks to literally crush the silver and gold prices. This is not conspiracy, this is documented truth. Comment rigged below if you think they are still breaking the law and need to be held accountable. The bullion exchanges, the cartels literally controlling the global gold and silver price, have resorted to drastic measures like server outages to halt trading when the prices spike. Case in point, on November 28, 2025, while the US was celebrating Thanksgiving, the COMEX shut down trading for over 10 hours due to so-called cooling issues at their Chicago data center on one of the coldest nights of the year. It's important to note that no other customer using the same facilities reported these issues. The building literally has triple redundant cooling systems that didn't work. Go figure. Traders were blind, markets were volatile, and silver's momentum was literally stalled and halted before it set a new all-time high, just as physical shortages are hitting critical mass. During the outage, reports indicate banks had emergency negotiations for literally millions of ounces of silver in futures contracts that were standing for delivery, pushing those settlements, paying millions of dollars in premiums to avert immediate physical handovers. Ladies and gentlemen, the system is cracking. Banks withdrew billions of dollars from the Fed's Repo facility for liquidity, some saying up to $24 billion. And this facility, it's important to note, is a backstop tool allowing eligible institutions, aka the big banks, to borrow overnight funds by selling securities to the Fed with an agreement to repurchase them in the future. Was this an emergency action to shore up their short positions, or a deliberate sabotage to let the banks cover their shorts? Let me know below. But that's literally just the tip of the iceberg. Silver hit an all-new high of $61.52 amid a massive supply crunch, where exchanges airlifted literally millions of ounces of silver between vaults just to keep the charade alive. This was the most expensive shell game in history. Now, if you want to find out more information about that topic in particular, check the description. I have a link to my video about the emergency silver airlifts. Big banks are shorting massively. 600 to 850 million ounces of silver shorted. JPMorgan controlling SLV's 400 plus million ounces, and the commitment of traders data shows that 70% of shorts are held by just 5 banks. 70%. This is a desperate bid to suppress prices as their survival literally hangs in the balance. Gold shorts are piling up too, with banks like JPMorgan facing billions in losses as prices break records. Now on December 9th, JPMorgan stock dropped an eye-watering 4.6%. That's billions of dollars in losses, while silver shot higher. They're literally slamming the futures prices like in the 1980s with the Hunt Brothers saga or 2011's $50 silver drop, but their modus operandi is not working anymore. Hit the subscribe button if you want to find out more about these slams. Why the drain? Eastern demand is exploding. Remember that Asia drives about 70% of global gold demand. China imported 50 tons of the stuff alone in February of 2025. These are massively strong strong imports despite record prices. India, one of the top silver importers, sees surging physical hoarding. The BRICS plus nations, now including 11 members, are stockpiling gold and silver for de-dollarization, reducing reliance on the United States dollar amid geopolitical shifts. Central banks are stockpiling gold at record paces. 634 tons bought in 2025 alone, and that's only through September. Quarter 3, we saw an uptick of 28% to over 220 tons of gold. So as firms are literally trying to tell you that gold is overbought, we're at the top of the market, central banks are still stacking it at record high prices. Why? All this while bullion exchanges vaults are hitting record lows. Shanghai's vaults are down 82%. COMEX outflows of 80 million ounces since October, 33 million in November alone, and December is looking to be a bloodbath. We saw backwardation hit $2.60 in silver. We saw lease rates of 39 to 40% at the LBMA in London. That screams one word: scarcity. Now let's take a quick poll. Do you believe the squeeze is starting or already here? Comment below. India's silver collateral bombshell from April of 2025 unlocks billions in household wealth, spiking demand in the world's top silver importer. This permits silver as collateral from April 2026, boosting demand massively. This could spike physical hoarding in the world's top silver importer. History continues to repeat as banks continue to try and suppress the silver price to protect the United States dollar reserve status. But something's different. It's not working anymore. Silver and gold manipulation isn't just a stacker's tale, it's a documented crime. JPMorgan was fined $920 million in 2020 for spoofing, placing thousands of fake orders to manipulate precious metals and treasury markets, deceiving traders for profit. As a matter of fact, UBS and Deutsche Bank were fined in the London FIX scandals. That was part of a $46.6 million settlement in 2018 with HSBC for spoofing commodities and rigging the gold and silver prices through collusive fixes. Scotiabank $60.4 million fine in 2020 for bogus trades fixing in gold and silver from 2008 to 2016, and many other banks are also guilty, but I don't want this video to be an hour long, so I'm not going to list each one individually. Why all this illegal activity? To artificially suppress or inflate prices, protect their shorts, and gain unfair edges. And don't forget, bankers have literally gone to jail over this, but it's simply not enough. Today, we are seeing prices slammed in New York during the day and recover in Asia at night. Why? It's a desperate bid to prevent the skyrocketing gold and silver prices, signaling dollar weakness amid rampant inflation. And when we're talking inflation, I call it the hidden tax. And remember, it got so bad in Zimbabwe that they went to $1 million notes, then to $1 billion notes, and literally to $1 trillion notes, slowly inflating away the wealth of their citizens. Additionally, the SEC delayed short sale disclosure compliance until January 2nd of 2028, easing scrutiny on bank positions. This literally aids paper games, which is futures manipulation, to suppress prices, shielding the fiat United States dollar system. But cracks are literally showing. There is massive buzz all over X about current price action and the continued silver squeeze. But hey, I've got a question for you. What actually caused the COMEX data center outage? Comment below. Now, JPMorgan's Singapore move, although unconfirmed, but timed perfectly with the outage and the squeeze and the withdrawal from the repo market to increase liquidity with banks. Workers reportedly received an email saying all operations should be moved to Singapore immediately. There's currently whispers going around of evading US regulations as Asia dominates the metals market, adding to the short squeeze fears. Remember, 5 banks literally control 70% of the shorts on the market for gold and silver, and those 5 banks are reportedly underwater more than $1.3 billion on silver spikes, and these numbers are growing. Remember, JPMorgan lost nearly 5% in their stock from the recent all-time high of silver. Will silver hit $100 an ounce in 2026? Comment your price target below. And if you want to to know my opinion? Check out the link to my prediction in the video description. Now, in my opinion, one of the only ways to fix this precious metal shortages we're seeing around the world is more mining. What do you think is going on in the world? Will the big banks and exchanges be able to control the price forever, or have they already lost control? Is mining the only way to fix the gold and silver shortage we are experiencing? Let me know in the comments below. Thank you so much for watching. Please like, comment, subscribe, and I guess I'll say catch you on the next one. Woo!
One stacker on a journey to find silver. International Stack.